Auto sales saw a big spike in March as buyers rushed to secure deals ahead of President Trump's auto tariffs. Joining us now is Mark Fields, former Ford CEO and a CNBC contributor. He's currently a senior advisor at TPG Capital. Mark, it's great to have you on. We're expecting these 25% tariffs on all imported vehicles to go into effect, I guess, by Thursday morning. Have we seen a pull forward in demand from consumers? And how much does that speak to the anticipation that we could see higher prices?
Yeah, Morgan, I think we absolutely saw a pull forward in March. You saw it literally in some of the commentary from the automakers, where in the case of a couple of automakers like Ford and others, they were up double digits in terms of retail sales in March, whereas previously in January and February, they may have been up a couple of percentage points. So I think you're absolutely seeing consumers trying to lock in prices and also beat the tariffs. And also, I think another thing they're trying to do, and nobody's really talking about this, is also it's about the residual value of the vehicle when it comes time for them to sell it in a couple of years. Because if you wait and you're buying a vehicle that is tariffed, that has a higher price, what happens if that tariff is reduced while you own the vehicle? Then you're going to get a real shock when it comes time for trade-in time. So I absolutely believe you've seen customers pull forward. I think you're going to see it in April, given the inventory levels that the automakers have. But getting into May and June, which is the prime selling season, spring selling season, that's going to make it a little more difficult for the automakers. And, ultimately, I think in the back of consumers' minds is prices are going up, and they will go up. Your segment before that showed, some of the price increases that are, being forwarded to the automakers. And I think a lot of customers are just trying to beat that.
Okay. So as we watch that, and with the latest union contract, U.S. auto workers have already gotten more expensive. We also have the FICO score effect of student loan defaults and delinquencies making the borrowing power of some future car buyers perhaps in question. How does all of that affect the wiggle room that if you were in the CEO seat of an automaker right now, you would feel you have?
Well, not a lot of automakers. Here's the things I would be thinking about. First off, everybody's talking about, will vehicles go up $3,000, $6,000, $12,000? Consumers don't really think that way. They think in terms of monthly payment. And John, right now, the average monthly payment in the U.S. is right around $750. If you take some of these kind of estimates of the price that will go up, your car payment can go up on average, I think, about $300. And so just think about that. A car payment above $1,000, and pre-COVID, it was a very small percentage of the population that paid that. And to your point around other things to think about, if you're an auto CEO, you also have to be thinking about your credit subsidiary and how much risk you want to take on the residual values. As I mentioned before, you're making bets on what those residual values will be based on the price. And if tariffs come down later on, all of a sudden you're going to have a big hole in your balance sheet and a big risk for vehicles that you have leased to consumers. And also, as I said, for consumers that have financed it retail, they're going to have a shock when they come back to trade that in.
So what we're talking about right now is short-term and medium-term pain. Is there long-term gain? And what I mean by that is the chicken tax, right? I mean, we saw what happened with the chicken tax. We had 25% tariff on light trucks. It was implemented back in, the 1960s? And we know the U.S. dominates, particularly here in the U.S., where pickup trucks are one of the most profitable vehicles that the automakers make.
It's a good point, Morgan, but I think the difference there is when you look at the pickup trucks, that's kind of native to the U.S. in terms of consumer demand and consumer usage. You don't see big pickup trucks in Europe. You don't see them in Asia. So those automakers that were subject to the chicken tax, building and designing to consumer taste for big pickup trucks, it's just not in their DNA. When you look at vehicles like small sedans, small crossover vehicles, things of that nature, these companies are making that all over the world and being, very cost conscious around that. So I think in the end, ultimately, the good news is that these tariffs will bring back manufacturing jobs to the United States, which is good for the economy. The bad news is that the costs are going to go up for consumers. And when you look at, the pricing at that time point, you're also going to have to think about labor and who's going to build it and at what price, because these are hard jobs in these plants.